Hello, everyone, and welcome to This Week in Hospitality Marketing, show number 528, towards the end of September of 2025. I am your host, Lauren Gray. Thank you so much for joining us. It has been an interesting month of things going on. A quiet storm month for domestic United States when it comes to hurricane season. Changes in how the world is working, finances, politics, so forth. I think that's a never-ending story topic at this point. And it's all involving different things. More conversations are coming up as to the forecast of RevPAR being one of the first negative RevPAR forecasts in a very long time. And already knowing and seeing that influence into the market. We've had those discussions on the show, these past few shows. But that's the reason why we're having the conversation today, is to how is it that we adjust and stay in front of, well, the dynamics that are going on in what we do every day as marketers for hospitality. To that end, today's show is asimilar to that concept, but more from a perspective and value proposition rather than a given well, actually, it will be pro-cons, can't say that, methodologies. It's more of a constructive conversation as to how are we going to actually engage with what we're doing. So better yet, let me explain the title and the topic, and then we'll go into why I'm being so vague as to how to define it. My topic today is pretty much about the semantics of what we are doing and how we're doing it from an objective personality of, we all have the famous buzzword right now is a vibe as to what we do at our company, how we're feeling. Are we feeling on top of things? Are we feeling behind things? Are we feeling growth? Are we feeling we're barely able to catch up, so forth and so on. And because of that, the topic today is about really looking at the comparison of being consistently average versus randomly excellent. And I say that from a strategic point of view because there are so many buzzwords as to how teams tackle things, scrums and Gantt charts and workflows and time schedules and cards and ways that we assimilate project management and how we approach projects in general. Is it specifically KPI goal centric? Is it progressive analysis? Is it adaptive interpretation? I'm not going to keep throwing around words. We all know that we deal with it differently. Anybody that's changed jobs from one business entity to another knows that there is a culture in one and another culture in the other, and how they approach things and how they focus on things are different as to their strategies. That's what makes us uniquely varied in our operations as hoteliers. But I want to kind of discuss these two in contrast in particular. Really, in a way, is which, if you were to be given one of only, and this is the or version of this, would you want to be more of a consistently average performance in what is done for hospitality marketing? Or would you lean onto the let's go get them randomly excellent, knowing that we're always shooting for the star, we're always trying to swing for the fences? And the strategy be damned in the sense of putting players in right positions at right times, putting programs in such a way as it is, we're going to go at it every time. Whatever comes up, we're going to go at it. And that's the randomly excellent portion of it. There are times, boom, you do hit and it goes out of the park. And it creates its own set of concern. So again, as I rumble through the why I came up with the idea of today's topic, let's go through and take it each segment as its own in a pro-con relationship. Let's tackle consistently average first. It's a little bit more easier to approach you. So from a perspective of pros associated with consistently average, in our world, being consistently average means there's a predictability and reliability associated with what we're doing. We maintain the ability to keep performance. It's kind of like a stock portfolio that it doesn't get too much of one thing. It stays in a lane for the long-term objective goal of maintaining or growing or whatever the long-term goal is in a persistent pattern. We don't overinvest. We don't underinvest. We don't high risk. And by the same token, we moderate any risk variances with lower risk, kind of like with stocks and bonds and how we create financial portfolios, very similar in the consistency of a marketing strategy. We only go for channels that we know have a production value that we need at that time. We spend money based on the parameters of what we consider to be value of return or KPIs. We don't always venture into randomness as much. We will always test things, but we don't tend to overinvest in those testings. So pros of that, you've built a steady brand presence. Stakeholders, your people that you report to as to what they're spending money on, feel more confident as to what your strategy is. They see the predictable persistency of what you're doing, so they are less likely to create resistance issues as to risk factor because they know that that's not part of the equation of what you're proposing. It creates a foundation of incremental improvement that says, okay, we've maintained this. What's the next of what we're doing? It's a progressive strategy upwards and onwards. So being consistently average is not necessarily a bad thing when you look at these aspects of pros for, obviously you are less risk and you are being more persistent and consistent with keeping with the measurability of your goals. Some of the cons, yawn, it's uninspiring. It fails to capture the attention of people. It doesn't chase down the things that might have changed in your market as readily. You're not a big risk taker. You're not jumping into an uncertainty principle. I've often talked about the fact that in many, many conversations throughout my career, both when I was in it and when I consult for it, there's always three primary questions that always get asked at the finance level, whether it's the exec team or whether it's the ownership group or management group or whatever. First one is, how much money can we make off of it? That's always easily the first question that comes out of it. Second, how much is it going to cost for us to make that money off it? As a relative value proposition, always the ROI, right? And the third one, which is always the one that catches a lot of the go, no-go decisions, is who else is doing it? In a consistently average, persistent performance strategy, that's a big question, because without a solid answer, you get an immediate pushback on whether it's worth the risk, because risk aversion is a part of the consistently average proposal. You may artificially plateau. There may have been better opportunities that you didn't chase down because it didn't fit into your portfolio of safe, lower risk and or persistent KPI values. And so you didn't go for those, hey, that really looks crazy over there. I bet if we jumped into it now, we could probably get something off it. That risk aversion keeps you from making those choices. So that's where the uninspiring comes into. You're methodically persistent and consistent on what you're doing as performance. That's hence the consistently average portion of it. It also creates eventually a self-persistent culture of safe thinking. It's just not, because it always gets shot down, or almost always gets shot down. No new ideas get infused in. There's only the validated historical record of basis of decisions that go forward. You don't look at as many alternatives. You look at sustaining and expanding the proven historical productions that you have. So you miss shifts with this process. You miss opportunities of changing strategy easier because you really have dampened the culture of exploratory or creative thinking to a more safe thinking. If it doesn't fit into our known world, it's less likely to even be thought of or discussed, let alone approved. It also it takes away from the magic of, wow, did we pull that rabbit out of our, that discovery of we risked, we took, we saw, we conquered. There's a bonding association with that running on the edge kind of mentality that comes with a non-consistent program, a consistent average program. It's good to be consistent. I mean, it'd be great to be consistently excellent. We're not using it as a comparison and contrast today. If you could always raise that as being a bar of acceptance, everything is always steadily amazing. We always hit the mark every time. Not only is it unrealistic, it's impractical because you eventually burn out because you can never keep going progressively bigger than you did before. There's not enough change, or there's not enough success stories. The world of silver bullets is not as rich as it once was. So that's the pros and the cons of consistently average. What's the pros and cons of being randomly excellent? Okay. There's always the upside. It's the roll of the dice. I can go away broke, or I go away rich and fabulously wealthy. It's that random capability of success. Now, if you have a good sense of it and you have a good track record of it, then you can convince people, this is what we're going to do. Let's make this happen. I saw this on TikTok and this is what we're going to do. We're going to create this and we're going to do this. And what's the expectation of it? The expectation is it's new and unknown, so we don't know. If the culture is supportive of that, hey, it's life is exciting. Is it a mitigated risk or is it an all-in? These are choices as to risk tolerance in that culture, and you go for it. You have a sustainable plan. Don't think that as if you're just doing anything to throw darts at a board and hope that it works. You do have a sustainable plan, but it usually doesn't get the garnered attention that an average-based progressive program does. You maintain things, but you're always looking for the next thing. It seems that you're never satisfied with the baseline that you have, that you are always looking for the exception or the undiscovered or what the competitor isn't doing yet. You're always on that bleeding edge. I get usually thrown into this category to the most part because I do keep more on the forward side of things as they progress, opportunistically looking at windows of opportunity. Why, that's a double redundant, right? Looking for the opportunity that newness brings. And for that reason, you run risk. But as dear friends of mine on the show, Stuart Butler comes to mind as I say this, Tim Peter as well, you have to do the block and tackle before you start doing the exceptional. So we're not talking about that conversation because we're talking about the randomly excellent, the one shot in a million that it worked, the all-in dice throw that boom, we were rock stars. We pulled it off. What are the pros about it? Okay, a huge upside potential that if you score big, you win big. Okay, it creates the brand buzz. It creates the viral moments. You get the excitement of the owners that gave you the risk money, and you get the confidence points because you're running on the high. That they're like, man, this guy, girl, them, they, everybody that was a part of the program, called it right. Man, do we have a cool team, man. They saw it, the opportunity. They were willing to put it in front of us. They're willing to fight for it. We gave them the opportunity to succeed, and they did it. Good stuff. Great culture build. It can immediately separate your brand and your product from everybody else that isn't. You rocked the world. You made the exceptional, randomly excellent thing to have happen. You stand out about everybody else. You do what it does everywhere. Kind of similar to what I was talking about on the One True Rate program 4 shows back, why people are so scared of it. One of the positives of this is that you'd be first. Everyone remembers first. I asked, I think it was ChatGPT, I said, based on current airline traffic between North America and Europe, if I were to fly on whatever day that was, on a regular commercial airline flight, what number would I potentially be as the person that went nonstop across the Atlantic in flight? It came up with some incredibly high millions of numbers. And I thought it funny because I thought it was an interesting bullet point. No one would care, okay, that I was the 18th millionth, 467,282 person to have crossed the Atlantic nonstop in an airplane. Everybody knows Lindbergh did it first, Charles Lindbergh. So being first in our conversation about randomly excellence, standing out, is a marker of success. It's a medal you wear. It's a remember when all that. I was the first one that did it. That randomly excellent opportunity is a huge adrenaline and reinforcement of risk taking that goes on. And when those score like that, when you do something first and it's successful, like a One True Rate program for your properties, where you decide to skip the garbage junk rates that are now legally beginning to have to be discussed openly about where they come from and where they get used or how they get accounted for. You get to relish in I took the risk. Everybody says if I did it, I was not going to be a rate parity. I'm going to be the only one in the market that has the high rates in comparison to my competitors. They're going to bleed business off me, blah, blah. And then when you prove them wrong because you got better conversions, you got better value of volume from those conversions, and you were able to mitigate your rates so that you were the first in doing it, you get the lion's share of the people that are thankful that they could just pay you the price. They don't have to figure out all the other prices you're adding to it, and you're getting the business from it. You beat your chest like Tarzan, and you're the winner. Or, in the other circumstances, you were the first to try something, and it didn't work. There's the highs and the lows. That's the randomness of it. But we're talking about the pros right now for randomly excellent. Doing these random things also attracts attention outside of what you've done it for. Not only do you go head and shoulders above your competitors, you also get called out by other entities, press, PR coverage, of course, other markets that see what you've done. It ripples like a stone in a pond when they see something that was randomly, wow, that, man, did they hit gold with that kind of thing. It also, as a sidebar of value, risking, doing, and succeeding creates an avenue of a kind of a breakthrough of shaping future strategies. Like you've discovered, you know what, from doing this, we've realized a new data correlation that we didn't look at before. This target segment, this audience segment, this offer type, this whatever it is. you have a new revelation to it, and it's yours because you're the one that did it first. You're the one that did it to be able to see it. Nobody else has seen the data from it that you have. And it gives you a momentum and a lead to something. Is it replicatable? Was it just a bolt of lightning? For those that know me, it's a fun pun to make. Will it happen again? Another fun pun. So you know that and nobody else does because you're the one that made the risk. You're the one that took the risk and got the information from what you did with it. So it has that. All right. So the cons, I think the Captain Obvious, it's inconsistent. Yes, you have your highs, but it's like a batting average for baseball players. If you have a 500 average, if everyone thinks you're amazing, but what they forget is the 500 that you didn't hit, swings and the misses. But man, when you hit it, it's out of the park. You know, you can have an RBI that's really low, but when you do hit, you're really good at it. It's that inconsistency, and it can make a predictability that closes doors for you. People will look at you, and I can say this from firsthand experience. A lot of times, I have to convince people that I'm just not trying to present lead edge ideas. These lead edge ideas are directly tethered to first, let's make sure you're doing all the stuff you should already be doing before you take these new shiny toys and think about using them, or new crazy ideas and think about using them. Again, the silver bullet world, there's not many in the holster anymore. There might be a few left that pop out of the blue that we've yet to discover. Randomly excellent may have that, as well as averagely consistent may also discover them. So inconsistency is a big con. Your inconsistency can also work against you in confusing your audience. 1 minute you have done this amazing thing, and the next they see, and you may be a tone deaf campaign. You may see nobody likes it. You're like, what the hell is this? You're so good at that, and then all of a sudden you're this. Big brands deal with this all the time. You know, Apple has done that. They deal with that. It used to be the amazing reveal. Now it's like, really? By the time the thing happens, we're pretty much fully fluent on what you're offering. Not really a big eye opener, and you're raising your prices, counterproductive. Anyways, just happened with Apple. That's why I'm saying it. And so because of that, it can create a confusion to your guests and your consumers because it's too sporadic, your quality shift. You go from amazing to that sucked. And it creates this, I don't really trust everything about what you're doing. I know that sometimes you hit a home run, but other times I wish you didn't go to bat because you're just swinging a miss too much. Okay. There's also a lot of wasted resource when it comes to this randomly excellent aspect, because you do bet on things that don't happen. You do invest in things that fail. And so when you do hit that rock star success, a lot of it is really just retipping the scale of cost back to some sort of equilibrium of so far so good. We're not on a negative. Wish we're more on a positive, but at least we're not in a negative. So there is that aspect of wasting resources. It makes it incredibly hard to forecast. If you're doing maintenance marketing and you're really looking for that home run every time, swing for the fences kind of thing, it's really hard to forecast that stuff because, one, you don't know the success is there. You're banking on it. And if it doesn't come through, it goes on the other direction, which is, wow, we are even deeper in the hole. What we thought was going to get us out of the hole didn't. And now we're deeper in the hole because of what we invested in it. So it makes it harder. And given the current climate of negative rate power that we're forecasting for now, what next year's whole travel mix is working out to, whether there's a stabilization of international travel or not, whether there's a reconnection to Canadian travel. International as a BB under category. Canadian travel is different than other traditional international travel, but all said and done is a financial forecast for the domestic, and I speak mostly of the United States because I'm here. Is domestic travel going to come up, or is financial uncertainty going to drag it down even deeper? These are things that are influencing our current budget decisions and current budget approval processes that we're all going through right now. So the randomly excellent has a challenge when it comes to getting budgets approved. What's that big chunk of money over there? Oh, well, we think that we're going to swing for the fences on that XYZ project first quarter of next year. Really? What happens if it doesn't work? Well, if it doesn't work, all we're relying upon is the fact that we had other campaigns running, but they really aren't expected to carry the load. Whoa, we got to rethink that. So it's going to get harder to get budgets across for these projects. There's ways to work around it, but we're not talking about strategies of conversations with budgets today. But there are ways to mitigate that risk factor to an understandable level of impact rather than all in. Anyways, it also damages the reputation of the team. Again, 1 minute, what is it? uh, first one day in the penthouse, next day in the poorhouse, or I forget that analogy of it, but pretty much you understand the concept. One minute you're high and running high on success, and the next minute you're in the dumpster. That creates a credibility issue where now every time you walk in the door, being that type of person, you have to remind them of the successes, mitigate them against your failures, and convince them about why this is different or why it's leaning towards the side of success. Again, not talking about strategies and presentations today, more of the pros and cons. So, in a encapsulation of what we're talking about, the pros and cons between both being consistently average or randomly excellent. Consistently average, safe, stable, predictable, not really exciting. Randomly excellent, exciting, high impact when it works, but unreliable and risky. Now, we've gone through the pros and cons of this. Let's go through the whys. Why would you want one or the other? The ideal world is a blend. And I say that not to be homogenous and saying, oh, let's all get along, let's go in the middle, no extremes on either end. There's a need to have extremes. There is a need, depending upon your product, to be consistently average, to be that rock steady, progressive, persistent strategy of when it comes to marketing. I would align this with when it comes to mid-tier markets, mid-tier branded products, established high saturation, brand saturated markets. There needs to be a persistent awareness of what you're doing, with the caveat that you should always continue, and more tools come to light of how to do this, that you get to test ideas, to not become complacent and non-creative and never suppress interestingly different ways of doing things, but to put them through a series of tests to confirm the potential validity of them, to give them a confidence score, much like you do with probability. I could explain the math of probability. I'm not trying to say that I'm a math geek, just the fact that in general, we all know it's based on the consensus of what is the likelihood of what you're doing to happen the way you say it's going to happen. In a nutshell, that's pretty much what we're talking about. So with the probability from a math perspective, and you're talking about marketing, you analyze the impact values that are associated with the proposed idea. What is the traffic of the audience that we're looking at? Why would they be targeted for our content? What is the content that we're related to that audience? What is the engagement value of that audience by targeting to them? And what's the cost associated with getting that conversion value from what we have to spend to get the audience volume that we need to make this a profitable effort? Those math things can be used to determine a probability of how risky, how valuable the idea would be. And it's to your own culture to determine whether that's outside or inside the parameter of acceptance. A lot of that parameter of acceptance gets shifted based on the need factor of what's going on. Maybe there's a diminishment of your current campaign runnings, and there's nothing that you see that you're doing that can be improved upon without doing something different. That's a first step in shifting from a consistently average perspective to a moderate, we have to rethink some of the things we're doing because they're not producing it at the levels historically that would validate what we've been doing. That's a key element. On the other end, there's times where from the risk-taking perspective, being bold is beautiful in the sense of being first at something because it will be what everybody eventually goes to. And that has a confidence factor. It's not a probability factor, it's a confidence factor. Confidence factor is, what is the likelihood that we're on the right path just early on it? It's very smart people seeing that this is something of an opportunity that's coming. And if we adopt it early, we get the benefit of the early adoption. And hence the lion's share of the impact before everybody joins the party. One rate is a good example of what I think is one of those directional things. It's better to look that direction before everybody else in your market, because if you're not the first in your market and you end up being the last in your market to do the one rate, all you looked is that you've lost all the business up to the point that you finally made the surrendered decision to join the rest of your destination group, and you're getting what's left over of what they've already been enjoying. And now you have to retool your entire campaign to now recompete with them when they're more front of mind for your visitation guests to your market than you are, because you were dismissively still trying to yield out a fractional rate program with resort fees and so forth that people publicly went against. That's a good example. I'm not trying to stand on a soapbox, Mark, but it's the best example I can give you of what I'm thinking about on this, confidence factor understanding of looking at doing something that will probably be the way that everybody goes to eventually anyway. So at that scale, you have rabbits out of your hat that you get to talk to ownership when they begin to see the impact of the economies that are going on right now, the negative RevPAR projections and or the diminishment of demand to market and or the rate degradation that you have to do to maintain your numbers to keep the market segmentation, your fair market share involved with your property. You have to come up with solutions. If you're an averagely consistent one, it's a slow start. It's a late to the game because you're not tooled that way, and so you're having to retool yourself from one economy to another economy, and you have to start branching into things. If you're the randomly excellent group, you're already built for that. You're already thinking about. We're always looking. What's the next and the best and everything else. So you're already in that culture of seeing, well, we thought about that. Let's scoop that in and see if that can be something. No, we saw that. Let's scoop that in and see if it can be something. That's an extremism is great for kicking the team into and putting it in high gear, putting it to a higher gear to get going on stuff. It also has its risk factors because not everything that's grabbed is good. So again, moderation is why I keep saying this. I think that you should always keep a good exploratory portion of what you do from an averagely consistent program into always being aware of what's going on in things that you're not involved with, so that if you needed to be answering questions about them, you don't start from zero and have to learn. You are at least starting from some perspective of awareness that maybe you have to invest more into to discover its value. I would say from the randomly excellent side that for the failures that can happen, they're going to hurt harder if it's a harder economy. The negatives that land, the swings and the misses that you have, are going to have a much deeper impact negatively than they had historically when the revenues were good, where you're just amping up good business already. Like we always say, money covers a multitude of sins. So having a built up, stronger, maintaining marketing strategy, the block and tackle strategy, is good to expand and take less of the randomness of initiatives and more on the certainty initiatives that you feel like, okay, we got 5 things we've been looking at. Let's have a confidence score on those 5 things. And anything that isn't above an 80 is just put back on the shelf. We'll worry about that another time. And we'll look at the ones that have a high confidence that they would be successful for the way we envision them. And take the best one first if you want to mitigate the actual value that you'd be investing into it. That way, if it does not work out the way it was supposed to be, the home run that it was supposed to be, you only got a single base hit, so to speak, metaphorically, then at least it wasn't as damaging as an all-in, and the loss deepens the hole. So that's really the contrast between it and the need to be in the moderation of them. You need to adjust whatever either of your strategies are culturally, given what's happening now compared to the historical years that we've been dealing with, post-COVID, and all the variations that implied in political climate changes and international and economic changes and everything else that has gone on. You should always reevaluate, especially as you go from where we are now, budget development, into next year's usage of that budget. As to a reevaluation, is there things of what we're doing that need to be readdressed or relooked at as to whether or not that is still the best way of doing them? And this is the time to make sure that you're just not doing it because you did it that way, but you're thinking about how you need to do things based on what you're needing it for. And that's going to be the key element to this. So it's not so much about being consistently average as a full-time strategy or consistently or randomly excellent as a strategy. It's understanding that there is a spectrum of it. Where does your needle land on that? And why? And is it the best place where the needle is at, or does it need to be moved? So that is my conversational discourse on having a consistently average program versus a randomly excellent program. So I hope it's helpful just to talk openly about the perspectives of it. It is the time of year to consider this because of all that's happening, and also the fact that we're getting through the close of the fourth quarter. We're getting into the fourth quarter now, obviously, and because of that, we're going to be shotgunned out of the other end into the quarter 1 of 26. So thank you For those that watch us on the simulcast, for those who watch us on the TV channel, for those that listen to us on the Hospitality Radio, for those of you that catch us on Hospitality.TV, and for those of you that join us with the Hospitality Marketing Club, thank you all for those. And for all the people that do simulcast our content, for those in all the time zones, we're in 209 countries. For those that listen to us know this already. I say it persistently. Because of that, we recast the show at 11:30 a.m. Sydney, Australian time, and 11:30 a.m. London, England time for the APAC and EU and Mideast groups that follow us. And we do translate the show in 11 languages, subcaptioned, for our highest population audiences around the world. So sometimes they shift. Sometimes we change the languages because we see the audience there, but most often they pretty stay persistent on the 10 languages that we translate from too. So the 11th is English, just so you know. Anyways, with all of that, my name is Lauren Gray. I thank you for the privilege of your time, and I look forward to talking to you all next week.